Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 10th of August, comes to you from London. And we start by looking at the chart. We see a lot of green here. This is gold, just looking at first, just pulling back a little bit, but holding on to its massive moves. But looking at the dollar, first of all, dollar is actually just improving a little bit here. So we are just seeing that improvement coming off the bottom. So changing to a short-term bullish trend, but of course the medium and long-term trends are still bearish. The euro therefore is looking a little bit more bearish against the dollar this week, and so that's quite key. Sterling holding the 130 level against the dollar, so looking pretty strong there still, but it is just turning a little bit bearish on that stronger dollar chart. And against the euro, sterling is sitting back above the 110 level, so looking a bit stronger than euro this week as well. Bitcoin just nudging the $12,000 mark again, so looking quite strong there, and in bullish mode on all three charts. The S&P 500 index had a fairly good week last week. We see this big weekly candle here. Remembering this is my weekly, my daily, and my 60-minute chart, my long-term, medium, and short-term views. So US stock market still looking pretty healthy, and the Nasdaq also just pushing higher to make new all-time highs as well. Taking a look at the futures this morning, the S&P future is up around 0.2%, but the Nasdaq future is just down very slightly. So the futures are relatively flat. We're seeing the VIX volatility actually up this morning, but it is in bearish mode, which is good for stocks. So we are seeing an improvement in sentiment. The FTSE future in the UK is up 1% this morning, and the cash market, the DAX in Germany, is up 0.2%, so we are seeing a bit of a move there. And the CAC Quarante is up 0.2%, so looking stronger there as well. Japan was down very slightly overnight, and Hong Kong was also lower as well. And if we look at the Hang Seng, we see here it was also bearish, down 0.2%. So still bearish on the charts there. The Chinese market was up 0.75%, and the Indian Sensex was up 0.75% as well, and the Aussie market jumped up 1.75%. So that's looking much better, having been really much in sideways mode for the last few weeks. Looking at gold, we're sitting at $2031 to $2,031, just pulling back a little bit, but as we said, still holding on to that bull trend there. This will give us new upside targets as well if we do pull back, so these pullbacks are quite important. Looking at silver, that's smashing to new highs, $28, really rocketing, so looking very bullish there. US 10-year yields, the outlook looking a little bit better, up to 0.56%, so short-term bullish for a change, but the medium and long-term charts are still bearish. Looking at the energy mix, we put our energy report out to clients this morning. Brent crude is actually up 1%, so looking a little bit better here, and WTI is up 1.3%, but we are just slightly below the cloud with downside targets. The real clear move is US nat gas. That's sitting, making new highs for 2020, so looking very bullish now, and that is a long-term recovery. We've got good upside targets here, around 5% higher, so we expect US gas to move higher this week. Coal fairly static at the moment, but holding on to around that $60 mark. Emissions up 2.3% this morning, looking very strong indeed. We've called our bullish call there. MBP is down 4%, had a massive move last week, and we were bullish there. We've called neutral today because after such a big move, we shouldn't be surprised to see a pullback. TTF is actually up this morning, and its recovery looking assured as well. Looking at winter gas, we're actually down 1%, but we're again holding this big move last week, so again we shouldn't be surprised to see a bit of a pullback. German power sitting at €40.50. 41's the key level really. We need to break to be more bullish, but we're neutral at the moment until we break 41. That's it for today. Until tomorrow, happy charting. See you then.